Hi, and welcome to Tech Leader TV. I'm your host, John Thomas Flynn, and this is our 9th season of TLTV, and we continue with a stellar lineup of topics and guests, the show that everyone's talking about, a live streaming video webcast and cable television program focusing on public sector information technology and the political landscape. We come to you today courtesy of our sponsors, Unisys, LexisNexis, Xerox, Dimension Data, Veeam, Comcast, Microsoft Tanium, Kronos, Optum, and Gigaman. And finally, Flynn Associates, a California-certified small business enterprise and trusted advisors for strategic IT business development and marketing and solution services. And thanks for watching. The Tech Leader TV website continues to set new audience records. We're reaching thousands of state IT decision makers and vendor partners who record over 250,000 page views last month alone. We recorded 2 million views last year, and our goal is to double that in 2016 with your help. And we have a very special program today, as usual, with our guest Cathy Cleek, Chief Information Officer for the Franchise Tax Board. And what could be more timely, with our taxes being due and payable in just 2 weeks. But before we get started, and I introduce Cathy and begin our conversation today, allow me to pontificate, if I may. Well, it may be March Madness in the NCAA, but it's another alliterative, a March massacre in the ranks of the state of California's IT leadership. And as they say, the month ain't over yet. Both the state's top security official and the state's chief information officer are leaving their post. One for reassignment, the other perhaps to the dreaded private sector. Is the carnage over? Are other Department of Technology executives next? Will acting state CIO Amy Tong clean house, or will further changes at the department await a permanent replacement? For the Office of Information Security, at least, Tech Leader TV hears that total reorganization is afoot, apparently removing the office lock, stop, and barrel out of the Department of Technology and moving it over to the California Office of Emergency Services. Not out of the question given the recent damaging legislative hearings on cybersecurity. We'll have to wait and see. Is this the beginning of further dismantling of the Office of the State CIO that began with the current administration's reorganization of the cabinet-level California Technology Agency, reducing it to a department under a new operations agency? The last time the state CIO in 2002 was forced to resign, it was Eli Boohoo Cortez, my successor, who took down the whole department with him in his fall from grace. Then it took almost 8 years for a strong cabinet-level agency to be reborn with the state's consolidated infrastructure, staffing, budget, and yes, real authority to do its job. It would be a shame to lose it again, to see the vital components of the organization and its responsibilities transferred away. Clearly, the next state chief information officer will have a challenging, if not Sisyphean task ahead of him or her. And Tech Leader TV will be watching closely. Well, on that happy note, let's get started. As usual on Tech Leader TV, we're going to continue to do our best to keep the spotlight on the state's management of its annual multi-billion-dollar IT investment, to make government more efficient and effective and secure. And hopefully we'll have a little fun and keep your interest along the way. Our motto is simple. As I like to say, California can always do better. Let's begin the journey now with our discussion on technology, government politics, and as I like to say, other unnatural acts. I'll be right back in a minute with our guest, and we'll begin. Hi, and welcome back to Tech Leader TV. As I said before, our guest today is Cathy Cleek, the Franchise Tax Board's Chief Information Officer and the Chief of the Technology Services Division. Cathy's been with FTB for all her government career, 32 some years I believe it is, when she started as a tax auditor. Since that time she's had very significant roles not only in technology, but most of it in the early years was in operations, in the audit, collections, and filing. She's a certified public accountant. I don't know what it is. We seem to have all these accountants on this show. Project management professional and a graduate of Cal Poly, and also a master's degree from Golden Gate University. Cathy, welcome back to Tech Leader TV.
John, thank you so much for having me back.
7 years, I believe.
I believe you're
7
right.
years. Well, we've watched the tape, and we spent a lot of time going over the promises you made back in 2009, so we'll get a chance to see how you score, since we're doing scorecards now. I guess the first question is, as we chatted a little bit before the show, talking about the Franchise Tax Board and how it differentiates between the other taxing authorities in the state of California. It really is a unique organizational role for all three, right?
Correct. California is the only state government that has 3 tax agencies. Franchise Tax Board, the one I happen to work for, is all about income tax. Employment Development, which we know as EDD, is all about employment taxes. And Board of Equalization, or B of E, is all about sales and use tax and any miscellaneous tax. So when you think of filing your income tax, you need to think about FTB.
Oh, I know. I screw it up every year with all 3 of them. I swear. It's not iterative when you sit down at the end of the year and do your estimated taxes and such, because between there's personal income tax, the corporate income tax, and there's a lot of nuances to it. Well, that's why we have CPAs, right? Yes. Well, tell us a little bit more about your organization, the Franchise Tax Board. And I know, and I want to point it out before I forget. I read recently that the Internal Revenue Service, obviously your counterpart in the federal government, taxes aren't due on April 15th this year. Are they different for California, or is it still April 15th? So on the federal level, taxes are due on the 18th, and California has conformed to that federal provision. And that's because Washington, D.C. has Emancipation Day on April 15th. Yeah. And so that's a holiday in Washington, D.C., so the IRS has changed it to the following Monday. And for Massachusetts? I believe most states have also conformed. But Massachusetts, I just read this morning, has Patriot Day. Okay. So they're getting an extra day. Patriot Day is Tuesday, so they don't have to file till Wednesday in Massachusetts. Isn't that funny? Yeah. But anyway, I noted in that article I read that I think they're expecting 150 million tax returns in the federal government, and I want to say 80% they expected to be filed electronically. Tell us about your fact sheet from Franchise Tax Board. So we love electronic tax returns, and on the personal income tax, we get about 83% of our tax returns electronically. And on the business entity side, it's been about 70%. So we like electronic tax returns because we can process them more quickly. And for taxpayers, there's fewer errors on electronic tax returns. So we think that's a good thing. I bet. And that's interesting because we had, our last show, we had the DMV folks, Gene Shiamoto and Bernard Soriano, and they, every time they're in here, and they're in here every couple years, every time they're in here, they say that it's more expensive for them to process car registrations electronically than it is in person, and I never believe them. I never believe them. It just doesn't seem to make sense. But anyway, tell us about your IT organization. Well, like I say, your division within the Franchise Tax Board. What's your budget? How many folks do you have? What are your new initiatives coming up? So the Franchise Tax Board, just to put a little context around that, is we have 5,700 permanent employees and about 1,000 seasonal folks. So this time of year, not surprising, we have a lot of seasonal folks. Our budget is $745 million, and we have 5,700 full-time staff. We bring in $60 billion a year. We collect $60 billion in taxes, which is about 60% of the general fund. And I seem to recall that a very large percentage of those occur between April 1st and the first 2 weeks of April. Absolutely. We, only 53% of people have filed to date, and the vast majority are going to file in the next 2 weeks. So if you want to be at a busy place, Franchise Tax Board is quite the busy place in the upcoming 2 weeks. So on the technology side, you asked, there's about 1,000 really talented technology professionals at Franchise Tax Board. Because of the amount of money and returns coming in, we have our own data center and have quite an extensive infrastructure at Franchise Tax Board. And we expect to get about 17 million tax returns on the individual side and 1.5 million on the business entity side this year. So
With that many tax returns or that many millions of anything, technology is your friend. So we use technology in very innovative ways and to make things much more efficient. And our budget is about 25% of FTB's complete budget.
Your IT budget is?
Yes.
Oh, wow. So how much was that again? 25%?
Yeah.
And what is that in dollars?
It's about $140 million.
So certainly one of the largest states comes to technology.
Yes.
And the percentage is probably the highest, if not up there, if not the highest, right?
Very high.
Right.
And I think it's because we've been early adopters of technology, and we're constantly looking for ways to use technology to do things in a cheaper, faster way.
Yeah. You mentioned before you have your own data center. How did you get out of Terry Takei's clutches to keep your own data center during the consolidation?
Well, we've had our own data center for years, and we were grandfathered in.
Oh, really?
And I think sometimes money speaks when you're depositing $60 billion.
Yep.
People want that money in the bank. They don't want delays.
Absolutely. Well, that's for sure. When you have a revenue agency, is your actual budget, does it come out of the revenues you come in, or is it general fund? Or
It's
how is
general
it
fund.
Isn't that strange? Well, same with DMV. Sometimes part of it is, and sometimes part of it is. You never know whether the source of the budget is going to be.
Well, our budget is nearly all general fund.
Okay. All right. All right. Now I know we're going to talk to some of your current initiatives, and even several years ago we talked about the Enterprise Data to Revenue Project, EDR, and I believe you actually have brought us a video about EDR. What are we going to see? So
FTB had kicked off a tax modernization effort. So it's a 5.5-year effort, and this is a video we made to explain to people what we wanted to do. So I'd like to have you show it,
Sure.
and we can then talk about it on the back end.
Love to. One of my favorite topics. What do you call them? They're not contingency contracting, but performance-based contracting and budgeting. Okay, here we go.
Considered one of the leading state tax agencies in the United States, the California Franchise Tax Board administers and collects income taxes close to $60 billion annually for one of the largest economies in the world. With this responsibility comes a level of expectation that we can only maintain with the most innovative thinking and comprehensive planning possible. Through a detailed business problem analysis, FTB has developed an IT strategic plan and identified significant business opportunities to make fundamental improvements to customer service, revenue generation, and government transparency.
This effort leads us to the Enterprise to Data Revenue Project, also known as EDR. EDR is the first major step in FTB's planned initiatives to modernize its tax systems. FTB's vision is to build a franchise tax board that is even more effective and responsive to the needs of the legislature, tax professionals, and most importantly, responsive to the needs of the California taxpayer.
In order to achieve and maintain this vision, FTB needs an IT infrastructure that effectively supports its key business objectives and the technological growth of the future. The Enterprise Data to Revenue Project will begin the improvement and modernization of that infrastructure by improving the manageability and processing of tax returns, making data more available, providing data analysis tools, expanding taxpayer self-services, and replacing outdated legacy systems. Return processing. EDR will make fundamental changes to both personal income tax and business tax return processing to process returns faster and more accurately to get refunds to taxpayers sooner while ensuring the proper amount of taxes paid on time. This will be accomplished by expanding the imaging and data capture of tax return data, expanding return validation, and implementing business rules and processes that can be easily changed and managed. Data and data analysis. FTB's current data storage systems operate in various silos that do not lend themselves to the sharing and utilization of available data. EDR aims to implement an enterprise data warehouse that centralizes all data and makes it available to all authorized users. Improve the quality, security, control, and use of taxpayer and third-party data. Provide data mining tools to help discover noncompliance and detect fraud. And improve the use of that data to determine the best audit and collection accounts to pursue. Systems and services. Self-service promotes self-compliance, which allows FTB to reallocate resources to revenue-generating activities. EDR will create and extend automated functions to reduce costs and empower taxpayers to manage their own tax account. Specifically, EDR will create a single external view for taxpayers to fully manage their accounts online. This includes returns filed, taxes paid, notices sent, as well as correspondence and account information such as address updates and refund status. Supply reusable services that reduce IT maintenance costs and create a single internal view of taxpayer information so FTB staff can respond efficiently to taxpayers, providing all the necessary information in just one contact. Legacy systems. The business entity accounting system currently lacks the ability to change with evolving business needs. EDR is set to modify those legacy systems so they can support the ability to integrate with new technologies, make it easier and less costly to make system changes, retire outdated and costly systems and applications, and reduce our maintenance and operational costs. The EDR project offers strategic solutions that will provide breakthrough and long-term revenue improvements. EDR improves the efficiency and effectiveness of our tax processing. This not only saves the state money, but also generates more revenue through increased compliance and collections. EDR benefits are projected to range from about $90 million to nearly $1 billion annually at a one-time cost of just over $200 million. By improving the processing of tax returns, better utilizing data, expanding self-services, and updating outdated legacy systems, EDR provides real solutions with long-lasting benefits.
Plain and simple, the Enterprise Data to Revenue project provides the capabilities to turn the information we collect into revenue for the state.
Hi, welcome back. Very interesting, Cathy. I didn't realize this is several years old, so how have the numbers stacked up since then? I think it was going to be $200 million in costs and $1 billion a year in annual revenue. And I think I've read where you're on the mark on some of those numbers.
So just to give you the numbers, we anticipated a $670 million cost. And that's both the vendor cost and state cost. Okay. And we're coming in right in that ballpark, rounding up to just that same number.
From $200 million.
That was the very early planning estimates, and the vendor cost only.
I understand.
But as far as collections, I can give you an update. As of December, we anticipated 5 years ago we'd be at $1.8 billion, and we're currently at $2.1 billion. Since we started the project.
Okay.
And then this year is our first year we anticipate bringing in $1 billion annually.
Okay. And is this the last year of the project, or the last year of the, how's that terminology work with this?
So the project was planned for development plus a year of warranty work. Okay. So December of this year was the final date we planned to do development. Mm-hmm. We had 10 deliverables over the 5.5-year period. Okay. And we've completed all of those 10 deliverables, and we're currently in a warranty period.
Well, I think, you know, this is very interesting, and certainly we get kind of in the weeds on this. It's very, very important, critical to how it works. But I must say the most interesting and fascinating aspect of this project is the way it's funded. Talk about that a little bit. This isn't your standard time and materials, is it? No, it's not.
And FTB has looked for ways to be more innovative in how we pay a vendor. We take and say, we come up with a fixed price for the contract. For example, in this contract, it's $398 million. Okay. So then we say, we will pay the vendor this capped amount of $398 million, but only based on additional revenue from the results of the new system. So we take 75% of that revenue, and we can pay that to the vendor, and 25% goes to the state. And just to protect the state, we hold back 10% on any payment. So at the end of the contract, at the end of our warranty year, the vendor will get a $40 million payment. And what this really does is it keeps both the vendor and the state very focused on the same goal. Right. Oftentimes in projects you say we have the same goal of a successful project. Right. But what that means is so vague. when you have numbers and dollars and cents and you can look at how you're doing each month and what you've estimated together, you really have a true goal that you're working together to achieve.
No, this is really fascinating, and it's a shame there's not more replication of this in government. Because I know when I came here 20 years ago from being CIO in Massachusetts, we were full bore into alternative procurements, alternative contingency contracting, as we call it.
Yeah.
Save sharing is another term for it, and the federal vendors use. But the idea is you're paid based on performance, truly based on performance, identifiable real savings or increased revenues in your case. But I imagine you must have a little tete-a-tete every year with the Department of Finance about your numbers. How does that usually work out?
That means I get to go to lots of meetings. And, but you know, I still think it's really good for the state because until we get benefits and things that really matter, we don't pay the vendor.
Absolutely.
And I think you end up with much better discussions between your project team, and it makes us deliver and be accountable for the results we said we'd bring in.
And kind of it's the Adam Smith, invisible hand, and all this kind of thing of competition and the profit motive, return on investment. We don't hear the term return on investment in government all that often, unfortunately. But certainly in your case, that's in big, big letters,
yeah,
return on investment.
This is the whole project. We anticipate a 7-to-1 return on investment.
Wow. Now, then why do you think it is? I mean, like I said, when I came here in California, Franchise Tax Board was doing some of these alternative procurements, contingency-based budgeting or contracting back then. But it ended, and I remember trying for years to try to get more done that way. And I fought every department. They just didn't, they were reluctant to do it. Why is that, do you think?
I'm not quite sure why they are so reluctant, but I will say anyone who wants to talk about this, it's something I feel passionate about. I'd be happy to talk to them about. And I think sometimes departments get really stuck on, I'm not a revenue department, this couldn't apply to me. Mm-hmm. But I worked on the child support system for a while, mm-hmm. and what we did there is we were trying to convert people into using the website versus going into local offices because mm-hmm. it was cheaper. Mm-hmm. And so we paid the vendor $1.50 for every new conversion over a baseline figure. Mm-hmm. So I think there's things like that that you can do that incentivize you to get the kind of behavior you want out of that system.
Sure.
That, well, I mean, other than just revenue.
Right, and the whole idea is if you're going to build a new system, you know, you'd think there'd be a return on investment analysis done that would indicate where those kinds of sources of funds could help pay for the kind. But it's reluctant. Even the legislature was never too excited about the idea. They didn't like the idea of not appropriating the money for something being done from unappropriated funding sources. That was a problem both in Massachusetts and here.
Yeah, I've gotten to spend a lot of time down there talking about how much I need this year and what's going to happen. But I think it's still a good model to keep you working together.
Oh yeah, I mean it is a good model, and it's few and far between actually.
And we've done it for this is our 7th alternative procurement that FTB has done. Mm-hmm. Mm-hmm.
Well, I think congratulations are in order. It's certainly a very significant project for you folks, and I must be very proud of it. You did mention SACS, one of my favorite stories, statewide automated child support project, which was terminated. I terminated it on my watch at personal and professional peril, I was told. And that eventually went over from the child support group, and it was put into a new division, and the implementation was handed over to Franchise Tax Board, I think ostensibly, and I think everybody admit, because of the technology expertise that people feel is inherent in FTB. Tell us about that project, because you mentioned earlier you were involved in it.
It was a difficult project, but one we are quite proud of, and the ability to deliver a system that had had troubles before, and we were able to deliver that new system for California children. And
I mean, that was, it must
it
have
was
got
a $2 billion
I was going to say,
effort.
it was huge. It was huge. When I killed it, it was $200 million.
Yeah, I'm sorry. And there was about, we were able to deliver the project on time. And I will say, I was super proud. We were paying the federal government $200 million a year in penalties. Right. And those ceased, and that money can go to many more productive things.
Sure. Well, I've always said I'm surprised that no other. I actually recommended somebody that you take over the 21st century project, the payroll project, the 22nd century, I should say, based on all the delays. I thought they should move it over to Franchise Tax Board because they've been trying to do it for 20 years through 3 different controllers.
Well, thank you for the compliment. I'm not running out of work at Franchise Tax Board.
Okay, okay. Well, enough about the past. Let's talk the future. What are you doing? What's coming up on your capital plan for the next couple of years?
Well, the first thing I want to bring up is, well, it's not on my capital plan, is, you know, mobile is really important. And we are seeing 36% of our web hits, people using mobile devices. So this time of year, people want to get their refund, so we have a new app called Check the Status of My Refund. Okay. So in January, we deployed the Apple iOS version, and at the end of this month, we're deploying the Android version. Okay. So I wanted to put in a plug for that. That's
a scoop. We got another scoop on Tech Leader TV. Go ahead.
So the next thing we're doing is talking about EDR2, because this was a modernization effort, but there's still more to modernize. And we look at our case management system. We want to modernize that. So our audit system, our collection system, and those that deal with finding people who don't file their tax return.
Will EDR2 be a new procurement?
Yes, it will.
And what time frame are you looking at for that?
We're starting with a business problem analysis. So that is, we will be going out to bid to work with a vendor on our business problems starting next month.
Next month. So the bid goes out next month.
Yes.
Okay.
And then we envision it, you know, taking about 4 years to get through the whole procurement cycle, and then another 4 years to do the project. So you can have.
So you'll be working at FTB for 50 years, huh?
So and the other thing, so after EDR2, we are also working on. We have a PBX, which is very old telephone equipment, and we want to move to voice over IP, which is what most people have. So we want to replace that equipment, and we are also working to replace our internal network infrastructure equipment.
Okay, and the voice over IT initiative, will that be go out for bid, or will you use Count at 3?
Yes, absolutely, it will go out for bid.
Okay, interesting. Just out of curiosity, why wouldn't you use Count at 3?
Well, that'll be part of that process.
Okay, so it will. You'll be going through Count at 3. Okay, you will. All right. Because sometimes there's a question about it. You're not an exempt department.
Correct, we are not.
Okay. Well, that'll be a big project. What about your call center? I always remember these call centers being big news at EDD a few years back. How's your call center situation? I mean, it must be critical to your success as well.
It is very critical to our success. But what I will say is, as part of EDR, we really are focused on moving people from the phone to self-service.
So is everybody else.
And so we have a new application that's called My FTB.
Oh, good. Yeah.
So we patterned that after what you're used to using with your bank. You know, you log onto your bank account, you can see where your money's been spent. You can make transactions, move money around, and we see the same thing with My FTB. Okay. So once you it is a 3-step registration process, and we really are marketing right now to get people to go out and register. So first thing you have to do is put in some information on a tax return that was filed 5 years ago. Then we mail you a PIN in the U.S. Postal Service mail, and then you can log in and register. And once you do that, you can see your filing history. You can view all of your tax returns that you filed in the past. If you've lost a tax return, it's there for you to view and print.
Wow.
All of your payments you've made, any correspondence we've mailed to you or you've mailed to us is all available.
Okay.
So
how are you publicizing this? I haven't seen anything on that. If I didn't talk to you, I wouldn't even know about it.
Anyone who's used our website in the last year has gotten letters.
Okay.
The majority of people use a tax professional, and my sister is a CPA, as a matter of fact, and she tells me to stop spamming her about My FTB. So we are really actively marketing, and that's part of the reason I wanted to come here today.
That's right. And talk on the show. We need a DVD now.
I'll have that next time.
Okay, okay. Well, that's pretty exciting stuff. And you've gone totally digital, as I recall.
Absolutely. That's one of the things as far as being efficient. We used to have paper processes and digital processes. So you could either be working on paper or digital, and we had to move paper around the building. So anymore, that is completely gone. So if you happen to mail us paper, once it comes in the door, we scan it, and then it goes into the tax return processing workflow, or a correspondence workflow, or a processing of a payment workflow. So that makes no difference to us whether it came in a paper or electronic.
Okay.
And we see that there's we've already seen efficiencies in how people work when they can work completely digital.
I bet.
And there's also some benefits. Any return you want to bring up, immediately it's available.
I mean, a little TurboTax right there.
Yes,
huh?
we do.
Well, that'll be interesting. Are you getting any pushback from some of the? I can remember when this was going through with TurboTax 10 years ago, when maybe more, when they talked about being able to actually file your taxes at the FTB website, which you can do, right?
Yes, we have an application called CalFile, and we have had 71,000 people go out and use that, and it's a free, secure way of filing your California tax return.
Is it only for an easy?
It's for the easier returns.
Right.
I told you we get about 17 million tax returns, and about 6 million individuals can qualify. So it doesn't have to be the simplest. You can have a Schedule A, which is your itemized deductions. But if you have anything more complicated than that, you'd have to use.
And only 60,000.
70,000.
70,000 used it.
So far.
Well, so far, after this show, you'll probably
it'll
will bring down your site, for cripe's sakes.
Don't say that. That's not funny.
Well, that is. That would be. That must be something you'll certainly worry about, particularly the next 2 weeks.
We have very sophisticated systems to watch that.
I bet you do. And I also recall one of your new initiatives is something to do with your data center infrastructure, network infrastructure.
Yeah,
yep,
we're always looking to upgrade that, because with the more, like everyone, all the big data, we're just using more and more data all the time.
And will that be a procurement, or is that?
Yes, that will be.
When will that happen, do you think?
About 1.5 years.
From now? Okay. All right. You talked a little bit about fraud, and I know it must be it's such a huge issue, and I would assume that there's a lot of your EDR revenue, if you will, is coming from the tracking down, or better preventing fraud. Talk about that a little bit. And are there other areas of FTB outside of EDR that are using these fraud and business analytics and other analysis tools to predict, where you're losing money from fraud and other issues? Yeah,
fraud is one of the business cases we used in starting EDR. And out of that, we said we need more sophisticated modeling approaches. So we're using SPSS, which is a modeling tool, and it has been very, very effective for us. We are able to catch like twice the amount of fraud that we had last year. And but this modeling tool, what was so important to us is we're using it for fraud and finding really good results there. But we're also using those same techniques and saying we want to choose the very best cases when we go out to audit someone. What's the case that we can collect from, not one that there's going to be no change. So we're using it there and choosing what cases we collect from. So those same techniques we're using to model and choose better cases to be more efficient.
I seem to recall when I was CIO that there was $60 billion of unpaid taxes that had been calculated, and I think it was just for a 6-year period. And that numbers must be huge, because I've even seen the Treasury report sometimes. It's still up in billions of dollars every year, right?
Well, we have what we call a tax gap, which is the difference between what's legally owed and paid and what's actually collected.
Okay.
And that difference is 10 billion with a B every single year. So that's a very big number. And we're constantly looking for, with the resources we have, how we do the best job to collect the correct amount.
And ergo, that's why you have EDR projects and other similar fraud initiatives. Now, we talked about this a little before the show. I'm very familiar working with the General Governmental Accounting Office about the Earned Income Tax Credit on the federal level, and I seem to recall there was legislation to create a similar program in the state of California. That must, again, have very direct impact on FTB.
So this is the very first year that California has an Earned Income Tax Credit.
Which is, why don't you explain it a little bit?
Lower income individuals that make less than $13,870, if they have earned income, so they have a job of some sort, can qualify to get a refundable credit. So they can get between $2,000 and up to $4,000 back. So trying to give the poorest Californians some money that they, we've heard really great stories about how people were able to keep their home from going out of foreclosure or to get food for their kids. So it's a very beneficial program for the poorest Californians, but unfortunately there's the bad actors out there. And nationwide, 25% of the people that file the claim have fraudulent claims.
25%. And you could expect the same number.
Yeah. So our modeling with EDR, timing couldn't have been better because we're using those models into very productive ways. So,
yeah, well, that'll be very exciting because that's one of the difficulties. It is a very worthwhile program. It's for the working poor. It's not just a welfare, but it's so susceptible to fraud. You always read every year about people in prison applying for a tax return. I guess because it's paid before it's reviewed, that kind of thing. So you'll have your work cut out for you in that program.
Yeah.
And we want to talk about security. That's been a big buzzword around the Sacramento for several weeks now, and certainly from all your colleagues around the country and CIOs and around the country. Tell us about what you're doing in the fraud realm.
So, one thing
I'm sorry, security.
Yeah,
security
I knew what you meant. So I did want to share with you one quote. When I think about security, I think of this Sally Ride quote. She said, "It's human nature to interpret lack of problems as lack of risk. But when this happens, people and organizations become complacent." And I think that is what's happened, is people haven't had a personal problem, and people have become too compliant. Not compliant, complacent, thank you.
I knew what you meant.
So I think that really healthy organizations have a risk management plan, and you're constantly reevaluating what is happening in this area, because it is one area that has changed dramatically over time. And we really have a three-pronged approach at Franchise Tax Board. The first is education, education, education. We work really hard on educating our own individuals on how you get a password, what's a good, healthy password. But when we don't take that just to individuals, we also work with tax professionals preparing returns, making sure that they know some of the best security practices. And then the other thing we see that security from an IT perspective needs to be baked in from the beginning, not bolted on at the end. So when we do projects and efforts, we talk about security from day one. With EDR, we built in security from day one. And then, because you want to verify that you did the right thing, we had third parties come in and evaluate and say, you did this well, you need to make changes here.
So if you had a legislative hearing and Senator Ed Chow asked you how much do you spend on cybersecurity at the Franchise Tax Board, could you give him a rough number?
Yeah.
Good. What is it?
It's about 7% of our budget.
All right. 7% of what, 140 million?
Yeah.
Okay. Very good. Very good. Well, it's obviously, like you said, a breach at an organization like Franchise Tax Board would be catastrophic. And
yes, and we take that very seriously, and we are constantly reevaluating what we are doing in the security realm, and that's never going to stop.
Yeah, yeah.
And
probably never going to be enough.
Yeah. And the one tip I would give to my fellow CIOs is, if you don't have a data loss prevention tools, there's some really good tools out there. It's a really great place to start.
Okay.
You don't have those tools in-house.
Good tip. Couple things. These are the ones that get you in trouble now, the questions I'm going to finish up with. But, when you look at some of the goings-on, the CIO governance model of the state of California, there's been a lot of initiatives out of the CIO's office. Fairly respectable, in my opinion, many of them. But, like, what about the new PAL, the new Project Approval Lifecycle STAR? How does that affect a big organization like yours?
So the one thing I think that is a strong point of the PAL program is the planning that's necessary. I think that projects that are well planned are the ones that are well executed. And it takes time and effort. I like the Lincoln quote that says, if you're going to chop down a tree and it's going to take you 8 hours, spend 6 hours sharpening the saw. That time is well spent, because then the effort is small. But you need to plan things out well. You need to know what you're truly trying to achieve. And I think oftentimes people just want to start. And I think that's really been the phase one that requires a strong business case analysis. I think will be very beneficial to us as a state.
How about the vendor performance scorecard? What's your reaction to that? Do you think it'll be good for your organization?
That one, I've been a little preoccupied with EDR, but what I will say is I think that the vendor relationship makes a big difference in a project.
Sure.
Jokingly, you know, I tell my team when we started EDR, we are in a marriage with CGI, and who is our prime.
Right.
And we also have 10 subcontractors in that contract.
Everybody's in that. You only
Yes.
got one bid, as I recall, unfortunately.
Yes.
Yeah.
But you know, when you form a marriage, it takes hard work. It takes communication, and you don't start thinking that things are going to get
Right.
bad. And what always surprises me is how often people get frustrated with a vendor and they tell me they've stopped talking. And I've never seen a relationship that improves with stop talking.
Right.
I think you need to constantly come back to the table, continue to talk, continue to dialogue. And when you keep saying, you know, this won't work for me, but this might, I mean, that back and forthness is what really gets you to the end of a successful project.
If you've got the vendor and the organization not communicating, you might as well just write the project off there.
Yes.
And we've seen that happen, certainly.
And it takes hard work, and it's not always easy, but
Yeah.
the result, you know, projects aren't easy, but the results are great.
Right, right. Well, you got 3 things. You still have those 3 sayings up on your wall about success stories. Remember, I saw them 5 years ago, something about customer service and effectiveness, and being busy isn't results. You still have those mottos?
Well, I don't know. The ones I have up there is, you know, don't confuse actions with results, because you can be busy and achieve nothing.
Yep. That's right. That's what it is.
And then the other one is hope is not a plan. Don't come in and just tell me I hope things go well.
Don't tell the president that. All right. Well, we'll wrap up on that one. We have a lot of provocative issues we can discuss at our sponsors' reception afterwards. But thank you for being on the program. It's always interesting, and we always wish we had a little more time to it. That's going to be all we have today, folks. Thank you for watching. We really appreciate you going to the website and giving your comments on things and telling us exactly what you'd like to see on the show, topics and guests that should be covered. Special thanks, of course, to our guest, Cathy Cleek. It'll be fun to spend a few minutes with her afterwards to talk about some of these things that we didn't get to and elaborate on some of the answers. We've got a great busy schedule coming up spring. April 14th, we have Christopher Cruz, who's the Deputy State Chief Information Officer. He'll be on Tech Leader TV. And June 2nd, we finally got Karen Johnson from the Healthcare Services and Barney Gomez, the CIO, to talk about all the issues affecting their organization, which when you look at it is probably the largest budget. I think Medi-Cal's up to $90 billion a year now, the budget, $90 billion a year. And in fact, they've just awarded the Data Integrity Project, which is fraud over there, which I tried to do 20 years ago, never got it done. So some of our sponsors, LexisNexis and others, are involved in that project. And thanks for watching. Don't forget, you can catch us on Channel 17 next few days. Check with your cable TV carrier and get your taxes done, okay? We've got no excuse not to. MyFTB, is it myftb.com?
No.
Just want to make it complicated.
Yes.
Quick.
Go to ftb.ca.gov.
There you go. Thanks for watching. We'll see you next time. Thank you very much.